The Canadian dollar is sliding against its G10 currency rivals midweek, driven by the government's gross domestic product flash reading for March and the central bank's latest monetary policy acti. On. The loonie had been rallying in recent sessions before Wednesday's plunge. Can the loonie restart its spike? Statistics Canada released an early GDP reading for the first time ever, and it was not good. According to the statistics agency, Canada's economic activity contracted 9% in March as businesses shut down and consumer spending was minimal. Analysts are already sounding the alarm. At April will be even worse as nearly all jurisdictions implemented lockdown measures to fight the coronavirus pandemic. During its policy meeting on Wednesday, the Bank of Canada, BOC, warned that the national economy is projected to plummet between 15% and 30% in the second quarter, which will be the sharpest on record. It does believe that the nation and most industries can rebound if containment efforts are done correctly and the pandemic is brought under control. The BOC announced that it would leave interest rates unchanged at 0.25%, hinting that it does not have plans to ease any further. However, the central bank decided to update its quantitative easing measures by purchasing $50 billion in provincial debt and another $10 billion in corporate bonds to ensure there is enough liquidity in the financial system. This helps ensure that households and businesses continue to have access to the credit they need to bridge this difficult time, and that lower interest rates find their way to ultimate borrowers. The reaction among analysts so far has been that leaving rates the same and adding to its stimulus arsenal were unnecessary measures but effective in shoring up markets. Put simply, many do not expect the BOC to adopt a negative interest rate policy, NIRP. Meanwhile, energy prices continue to weigh on the loonie as oversupply and falling demand impact the sector. May West Texas Intermediate WTI crude oil futures dipped 3 cents, or 0.15%, to $20.08 per barrel. It had dropped to as low as $19.43 in intraday trading. June Brent crude, the international benchmark for oil prices, tumbled $1.81 to $27.79 a barrel. Crude remains Canada's top export, so any huge change in prices can impact the economy. The USD-CAD currency pair advanced 1.46% to 1.4083, from an opening of 1.3882, at 1856 Greenwich Mean Time on Wednesday. The EUR-CAD jumped 0.94% to 1.5383, from an opening of 1.5238,